Hello everyone, welcome to my channel. It's Gwyn Michaels. Today in this video I will be sharing with you how to analyze a corrective wave. Okay, so I'll be doing this video with your help and we'll be looking at it together step by step, how you can analyze when the market first have changed and how you should plan in a corrective wave pattern, or how you can trade a corrective wave looking for an impulse in a corrective movement. Okay, so first of all, let's start with this one here. And if you're new to this channel, I recommend that you subscribe and also smash on the notification bell on this channel so you'll be getting all the informations whenever I post content such as this one. All right, so today in this video I will be using the case of USD Singapore dollar. Okay, so here I'm using this for this example here, and I will be sharing with you the data from December 2020 to date. Okay, so I'm going to be sharing with you how you could have followed up with that corrective pattern there and also look for a trade inside a corrective pattern. All right, so let's just kickstart first, and also let's go over here. So we're not going to be counting this wave here. Okay, so but what we do know is that this is a trending move. Okay, so this is a trending move to downside. Okay, one of the things I do not oftentimes do, okay, is try to look at the overall trend. Okay, so if we look at this one here, we could see that we have a resistance off there and we have a support down here. Okay, so we have not bounced that support, but however we did bounce that resistance back in 2020, and then we did started to drop from that point on to the downside. Okay, so looking at this one here, I think we have a 3-week move here, which is corrective. Okay, so this could have been an impulse, which I would clearly see. So I could say that we could have been working out an A, then this could have been a B, maybe a C of a flat pattern, and then price will continue side. Okay, so that I do not know here, but this video here I'll be sharing with you the breakdown of the corrective wave here. Okay, so let's go over start about it. Okay, so here we had a strong move to downside. So this is a daily time frame. Okay, so if we swap over to another time frame, you're going to be seeing also similar ones. So we had some sort of moves up here. Looking at this one here, I like to first of all do this on my chart. I like to draw the support on the last low, also because this gives me an idea or shapes my chart into a form that I could be able to understand. All right, so here we start to see some bit of push. Okay, this is a very strong impulse. Okay, so here, and let's say that we have our current trading day to be here. All right, so our current trading day, we're currently trading on the 19th of March 2021, and there we started to see some movements there. Okay, and then we start to see some movements there. So we are going to be concerned about the activity from that point on there. Okay, so I just want to play some of these bars here, and then let's see also what happens there and how you should have planned that kind of movement there. Okay, so having seen this double bounce here, overall, remember guys that we were in a downtrend. Okay, we were in a downtrend, and looking at this one here, I know possibly, just possibly, in a horrid trading situation, okay, in say maybe a horrid trading situation, you could have been finding yourself, okay, wanting to analyze the market, maybe some sort of looking at these as maybe a flat pattern such as these. Okay, so you could be looking at this as an ABC. Okay, so that's going to be the wrong labeling for that. Apart from the fact that, let's look at it. Okay, these are things I oftentimes like to do on my labelings here. So I don't want to be seeing a flat pattern go up to the 161.8. Okay, I love to see flats terminate around the 121 right here. So this one went up to 161.8. So automatically, this scenario here is wrong. Okay, so I would put it as a wrong scenario here. So whatever is happening here, I know that that structure has been invalidated, and I should be waiting up for another setup. Okay, so guys, whenever this happens, you're only waiting for another setup. So you could expect to have a very strong retracement. Okay, a very strong retracement. So either way, you could be looking at trading that retracement back into maybe the 61.8. And remember guys that we are still in a downtrend. Okay, so you taking a trade like this, makes this a trend flowing move. Okay, so you're looking at these as a correction. All right, this could be a correction, all right, which could also be a start of a new wave. Okay, so you need to understand that when price wants to start a new phase of market movements, it doesn't just go boof, all right, it doesn't just move in a linear form. Okay, so price moves in an impulse corrective manner until it's able to over time get to its desired destination, which is a desired price, okay, or territory or supply area or demand area. Okay, so here we're going to work out this together here. Okay, so looking at this one here, we have price move up to this point here. So this could have been a correction of this. Okay, this is what I'm talking about here. Okay, so we have a very strong impulse, so this could have been a correction of this. Okay, so when do you start taking your trades? Okay, for a trading condition such as this, I think one of the best areas to look for taking your trades should be at the break of a key environment. And if you're taking a trade off that area there, you want to be putting your stop loss there, and you want to be putting your take profit here, somewhere around here. Okay, so you want to put in your stop loss here and take profit somewhere around here, which is 61.8 of the retracement from the swing low to the swing high. You want to be taking that retracement area. And for those of you that are actually conserve traders, okay, so for those of you that are aggressive traders, from this point on could also be where you can actually look to hopping on a very huge trade. Okay, so you can hop in on a very huge trade and then take your profit inside of this environment here. So let's look at the two examples here. Either way, so the differences in terms of risk to reward here. For the risk to reward here, for a conservative trader, we'll be looking at targeting. Okay, let me just go ahead and adjust this a little bit. I want to zoom this a little bit. So for a conservative trader that will look to put up a pending sell stop, and an aggressive trader that will put up an active sell immediately at price or instant market execution, putting his stop loss just above the previous high. Here, let's look at the differences. So for an aggressive trader, he'll be looking to make 1:3.6 risks to reward. Okay, and for a conservative trader, he'll be looking to back 1:2.3.5 risks to reward. Okay, so let's look at the differences on here, what and how that would play out. Okay, for a conservative trader, his trade is being triggered and it's going back on a loss of some sort. Then for an aggressive trader, okay, so he's already in profit. Okay, already. So let's look at it, how those price movements went down. And as you can see, that price left the territory here. So at this point is when you want to be starting to draw your assessment, okay, on these, to be able to check or see if your initial trade plan is actually correct. Okay, so you want to be adding some of those things that will give you confidence that your initial trade plan is actually indeed the correct analysis. Okay, so by so doing, you are going to start adding some lines. Okay, so this point here has proved that this was a correction. Okay, so here is the break to the downside here, and at that point there, you understand that you are correct with analysis and you want to tighten your stop loss. So I want to be shifting my stop loss here for two scenarios here. For the aggressive trader, you want to be adjusting your stop loss, and for the conservative trader, you want to also be adjusting your stop loss also as well. Okay, so let's also watch out as market unfolds in the next few days here. All right, so the days continue and market continue to drop in that fashion. They're going over to testing the 61.8 Fibonacci retracement as we initially planned, and as well went below that point there. All right, so the next area which I want to be looking at for a trader such as myself, which is the Elliott wave trader, I want to be looking at the 78.6, having pierced through the 61.8 that way. Okay, so I want to be looking at here and how market will unfold also further. And you can also see that further market did trigger the 78.6, which I did speak about here from this point here, and nicely. So for those of you that would have wanted to stay on the trade to maybe a good target area, would have been able to add more to your profit. Okay, so I want to be looking at situations or market conditions where I can, as a trader, set up my target for different take profits. Okay, so you want to be taking your profit at different areas if you're such a trader that is patient enough. Okay, if you're patient enough as a trader, you can as well look at different profit areas. Okay, for this one here, so in this corrective wave, we are actually looking at the best opportunities to take trades of these. Okay, so looking at this one here, and it's triggered nicely. So at this point in time, as a trader, we are off this trade. So what are we looking for again? We are looking for the next opportunity in the market. All right, so the next opportunity in the market is when the market presents us with one. And oftentimes I teach my students here back also in the academy and also back in my group that one of the structures which I look out for in trading is what I call fail of a drop. Some other time, some other traders may actually look at this kind of formation as maybe just these. Okay, so that's when other kinds of traders are going to be drawing this kind of formation here. But I look at this as not this formation, be it a bat, butterfly, or whatever harmonic pattern you want to look at it as. Okay, see it as. Okay, for the harmonic traders, here in the Elliott wave, I don't recommend that, or I don't teach the bat pattern or the harmonic patterns as well. So I teach basically they call Elliott wave patterns. All right, and these are few patterns that are not in the textbook but are actually present in the market. So as you go along in my videos, you're going to also see this explanation about what I call fail to drop. Okay, I call it a fail to drop because this retracement here should have sent price back into maybe a next low, and then price continues in that format. But at the point where price comes into this zone, because this is a huge supply zone, and breaks that zone, definitely a huge number of position or block orders that were present in this zone are being taken out. Okay, they are being taken out, and at that point in time, price could continue in its movement to that direction, which means that the new price movement is very much stronger than what it was before, and there is a change in the price movement. Basically, this could also be a news related move, or could also be as a change in the market sentiments. Okay, what the large players are actually doing, it could also be as a result of that change as well. Okay, so looking at this one here, let's look at if price can actually break out this point here. If price breaks out this point here, what you want to be looking for is looking out for a trend following strategy or a trend following pattern. One of those trend following patterns I recommend is the triangles or the corrective zigzag is what I also recommend. You can be looking at corrective wave such as the ABC, which is could also be a triangle. Okay, could also be a triangle of an ABCDE, or could also be a zigzag of the ABC. Or you can also be looking at some other corrective patterns which I also recommend, or the core Elliott wave patterns in this kind of setup. Okay, all right, so let's look at as price actions developed, what actually happened afterwards or after a few days. Okay, so we also saw that price did make a shift after 4 days of trading. Price made a shift back into that territory, but actually we had a very huge candle here which created as a rejection candle. If I zoom in a little bit into this, you're going to be seeing this rejection candle here on the daily. So whatever you want to be seeing on this rejection candle, you want to wait on a smaller scale. Okay, a smaller scale is going to give you an idea of what this is. Okay, so if you're having a smaller scale pattern of movement such as this, and then you can start to label this as this. Okay, let's assume that you didn't get into a trade from this point here to buy to the upside, which is the extreme here of the B wave. You want to be waiting for price to break out of this zone. Okay, then you want to be waiting for some sort of retracement, be it the 38.2, okay, or the 68.1, okay, because these are core Fibonacci retracement areas. Okay, these are core Fib areas where price respects a lot. Okay, let's look at what also happened over time. What happened was price able to break out of this zone. This is going to be a very important area here for price. Okay, let's look at the day progresses. The next day progresses and price continues to shed off this zone. And if you're looking at this from a lower time frame, I will I'll put up this that price have failed in its movement to the upside. Okay, because one of the things I don't like to see of the market is when price creates a structure for a breakout and then that structure fails one more time, I want to be looking at the retracement of that zone and then the next profit target to another destination there. Okay, so if you have seen that many times in the market, this is also the best entry point for a sale. Okay, so if you're looking at these for a trade, okay, and you have this kind of pattern and price fails one more time, there is a possibility that price could create an ABC of this kind of formation for the next push to the upside. Okay, but there could be a possibility that if price moves up one more time and then drops back one more time, it means that this pattern here have failed. Okay, so in some cases, some other traders may start to look at head and shoulder pattern for this kind of formation, and we also understand that this could be a neckline. We have the right neckline and we have the left neckline for this kind of formation, and we can as well expect that price could continue from that point to go move to the upside, breaking this is the right shoulder, okay, the left shoulder, and this neckline here. All right, and we can expect that price should go below that neckline. Also retest could also be possible, and then price could also continue moving down from that point on. Here in this example here, I would personally love to take a trade off this point. From where we are at the close of the trading day, I would want to do this. Okay, for those of you that always want to step into a trade, this is also another possibility that you can also hop in on a trading position here. So if you're an aggressive trader, you want to put up your sell entry here, and you want to look at the extension area here. All right, you want to look at the extension area here, and note guys that a failed pattern here, which I'm going to be sharing with you, I want to put up targets as well. I want to put up targets as well, and on this one here, so we have the 127 extension in here. So we have the 127 extension here, so I'm going to put up a target around the just above the 127 extension there. Okay, so for this one here, you can understand I'm going to take out my Fibonacci tool here. I'm going to take out this other Fibonacci tool here so that we can have a clean chart. So here I'm going to drag my target up to this point here, and then I'm going to be looking at a possibility that price could also be on its way into forming this pattern rather than another push to the upside. Okay, then I'm going to be starting to draw my wave counts there. I'm going to be starting to draw another wave count here, that this could be my possible wave 1, wave 2, wave 3, ABC for a wave 4, and then I'm going to look at a wave 5 here. Okay, so with that, I've been able to come up with a trading plan. Okay, so one of the trading plans I've been able to come up with is that this is going to be my impulsive wave up to the upside here, and this is going to be my corrective wave here. So it's rather too strange for me to have a 5-wave move to the downside, which could also be a corrective wave for a bear. All right, so I've told people many times, the Elliott wave pattern is not really what you see on paper every day. Patterns change, formation changes. The standard created, or the standard that we adopted from Ralph Nelson Elliott, was meant originally to trade the stock market. All right, so all this we have as price movements or price actions or whatever is being thought, candlesticks formation, is as a result of the overall feeling of the market participants. Okay, so things could change in the market. Nothing is static in the market when it comes to trading. Things change, pattern fails. Okay, there is no 100% guarantee that what it is on the textbook should be what it is in the real life. Okay, things happen, things change. Okay, I've seen 5-wave moves create as corrective waves. Sometimes it could create as an X leg of a WXY sequence. Okay, so let's look at this one here, what happened and how this one played out. As day progresses, let's see how this one played out as day progresses. As day progresses, we started to see some short movement coming into the market, and that continued to move into that market. Looking at this one, so at this point you want to tighten your stop loss. Okay, at this point you want to tighten your protective stops, drag it a little bit closer to reduce the risks there. And with that one, we could see cleanly that market did hit just as perfectly as possible the 127 extension as we initially planned before, and then reversing. All right, let's look at it. Okay, so you can see nicely, if I zoom in just nicely, you can see that price did hit the 127 nicely and then reverse at that point there. At that point there, I could start as a trader. Personally, I would start to plan for what I call the end of movements. Okay, so whenever you have a 5-week move complete, you can then expect either a corrective pattern of the ABC, be it any pattern, but at this point in time, I would believe that this is the end of that movement there. So I'm going to take out this one here. I'm going to take out all these. So I'm going to take out all this now because I just made that explanation clear to everyone how I should have planned or how I would have done for this one here. So let's look at the next one here, how we should have planned or how we could have planned for the next trade to the upside. Okay, so for those of you that actually are trend following traders, here is when you want to be drawing your trend line. Okay, so we want to be drawing a trend line. For those of you that actually look at ABCDE pattern, this is also a similar one here that you could be drawing your trend line such as that, or you can be doing an end of wave pattern. All right, so let me just go over check out this line. I don't want to see this line. Okay, so this could also be your possible end of wave design here, and the next area which you want to put your pending buy stop is going to be somewhere around here. Okay, so you want to be seeing break of a trend line. So once you have a break of a trend line, that is when you can hop in on a trade. All right, so at the break of a trend line is where you want to hop in on the trade. And let's see, so for a possible target area, you want to be looking at target area up to the 127 extension area. Okay, so why do I oftentimes choose the 127 extension area first? That is a very good area for a target. Okay, so I like to take my trades off a very unique statistical target. You need to have a reason why you take a trade. Okay, so I oftentimes recommend that students should have reasons why they should take a trade and also reasons why they should not take a trade. So if you're having reasons why to take a trade alone, you should have reasons why you should not take a trade. Okay, this one here, so we had originally planned for this, and then let's see how the breakout will feel like. All right, so leaving this one to run, and then let's wait for the breakout, what it would look like using a pending buy stop. So this one here nicely went up to hitting our entry point and then going up, and let's see how everything fade out. All right, so we did hit the 127 extension, and that is no longer our concern, because one of the things I look to do as a trader is to look for the best opportunity to hop into a trade. Okay, so with that, we're out of the trade. So we've taken 2 trades off this one already, and this is the 3rd one that we should have taken, and these are the opportunities that are there in this one here. So let's look at this one here. I'm going to take out this line. I'm going to take out some of the tools which we did use before. I'm going to leave this one here. So I'm going to be drawing this one here. So if I'm expecting a corrective move, okay, I'm expecting a corrective move, I should not be having price consolidate in here. Okay, I should not be having price consolidate here. Okay, so I should be having some sort of a very strong impulse. Okay, a very strong impulse, and then a very good corrective wave, and just maybe a strong impulse. Okay, and then maybe a corrective wave, and then maybe another impulse that should send price down. Okay, so if price fails in this kind of formation and then stays around here and does another thing such as this one here, then as a trader I would want to change my bias. All right, these are patterns that happen every time in the market. Then you're going to be expecting that there is a sting at the end of the tail. Either price wants to correct of some sort in some sort of fashion and then continue its upside movements. This is very easy to understand, that the market participant failed or find this price area as not a good supply to start selling of USD against the Singapore dollar at this point in order to back profit. Rather, some sort of some amount of sellers were present here and they couldn't send price back down, and some amount of buyers were actually present here. Those buyers that were present at this point also became present at this point here, and also will be present at another point, and also present at another point until price is able to move into their desired direction, which means that a new set of players actually find themselves or find price enticing or find value in this price area. The very big difference between price and value, they're not the same thing. So if you're looking at price and value as equal, they're not the same. So you can have a particular set of or group of players actually looking at around 1.34 to be a good buying area for USD Singapore dollar, and you can also find some other set of players finding 1.36 or 1.36 or 37 area as a good supply area. So these are two different people operating differently in order to push price into a desired target. Sometimes it could be the same set of players taking profit, okay? It could be the same set of players taking profit, and with that, price could also shake a little bit to the downside or the opposite direction of the trend, and then they could also unload or load up some new positions into sending price into their desired target area. Okay, so with that, I think I've spoken a lot about that. Let's see how price developed over the next few days. All right, so over the next few days, we actually saw what we initially planned for as a trader here. So at this point in time, we could have started looking for some short opportunities here. So here could be a very good short area. Okay, and one of the places or one of the environments which I would look for a target area would be the 127 extension. Okay, so I'm going to put my take profit here and my entry is going to be here, and let's look at it. All right, so this is triggered. Okay, so this should have been a trade I would have taken here, and then let's see how that would have played out. Okay, so this actually hit nicely my 127 extension, and you can see that I'm off the trade, and that's overly not my concern. So what I'm going to be waiting for is going to be the next retracement area here. Okay, so I'm waiting for the next retracement area here, and I'm going to waiting at the 61.8 to take my next trade. Okay, remember guys, oftentimes whenever you have price going into profit on your favor, you want to be adjusting your stops. All right, you want to adjust your stops, so you're going to be having two targets. For this one here, I'm going to be having two targets here. I'm going to put up my extension there, and I'm going to be targeting the 127 extension there. All right, so we have two target area. We have one previous low, we have 127 extension. Let's look at our entry if we actually could have gotten into a very good trade. I think I have lots of lines here, so I'm going to start taking out I don't know, I have that 8.2, I don't know from where. Okay, yeah. All right, so let me just put up those Fibonacci tool again one more time. So this is that 8.2 nicely, and then let's see what could have happened or how that would have played out. Okay, so I always recommend that you look for the best possible entries to hop in on a trading position. All right, and then you wait. All right, so we are triggered on the trade, but at the moment we are still on a loss. Okay, so we are on minus. We did not hit our stop loss because our stop loss is above our previous high here. As you understand, as I like to take my stop put up my stop loss. Okay, so in this video you're going to learn as well how to put good protective stops. Okay, so we have it that price then went back. We had a double top. Some saw it, I don't know. Okay, so price then moved into direction. So at this point, you want to tighten your stop loss. Okay, you want to tighten your stop loss, possibly bring your entry or your stop into your entry in order to break even. Let's see how the day unfold, and we try to tighten our stop loss. Okay, so did we hit our take profit one? No, we didn't hit any of the take profit, but our stop loss is being tightened. All right, so let's look at it. Okay, we'll not see hitting a profit. Whoa, I think price is reversing. Whoa, oh god. Okay, so this actually reversed. Okay, so this actually reversed, and this is an actual trading condition. Okay, this happens every time. So when this happens, this is not the best time to adjust your stops. Okay, it's not the best time to adjust your stops, shift your stops, and hope that the market would give you money. Okay, it's not the best time. Okay, allow price to hit your trail stop or your stop loss nicely, hop off on a trade, wait for a new setup, and then understand what actually the market is setting up to do. Okay, that is one of the things I recommend for traders. All right, now at this point, if I'm out of the trade here, I didn't make a loss, but however I didn't make much of a profit, but I was actually able to hop off on a good trade. This is one of the things I recommend for traders. Okay, so if you really loved this position and you love this trade, either way you could have put your pending buy stop here or sell stop here. I'm going to share in the next video candlesticks you need to look out for in price formations and what you need to not to look out for. So patterns, price patterns or candlestick formation you need to avoid in a bullish trend, and also ones you need to avoid in a bearish trend. And also those candles, when you see them in the market, you should be able to put on your trading gamuts. Okay, so in this one here, the next thing I would have done as a trader here, or I should be doing as a trader here, is to put up a sell stop and also target back the area which I wanted to see price move into. Let's see if I was actually triggered, or I would be triggered in the trend. All right, so we have it that price moved into this direction here. So this played out differently. Now I have a new trading condition. I have a 3-week move down, and I have what could be a possible 3-week move up. All right, so I don't know. All right, so what I'm going to be waiting for is that I see that there could be a possibility of a flat pattern formation, because a flat pattern formation could be a 335, all right, or some sort of complex pattern, okay, but actually it's going to be corrective. It's going to be more of sideways, okay. It might not actually be on the same horizontal, say, range kind of market which has a definite or specific resistance or a definite or specific support. It could be such as this one, which I oftentimes speak about, could be a flat pattern. Okay, but understand that when the flat pattern goes beyond 127 up to the 161.8 and beyond, the pattern is actually wrong. Okay, sometimes it could play out. It could play out sometimes, okay, but as a trader looking for an opportunity to step into the market based on a certain market condition or the certain market formation, this for me as a trader is wrong. Okay, so I will not be looking for a trade with this formation here, because I see that price have gone beyond the 161.8. all right, so you want to be stepping off this kind of market and then looking for a new price formation based on the concept. Okay, so with this one here, I think price have gone beyond this point here. So what I'm going to be waiting for the trader is going to be the next push to the up to the downside. Okay, then I'm going to start to draw my kind of lines such as this, and expecting a correction. At the end of this correction here is where you want to put up your long position or your long entry. Okay, so these are things I tell traders, or I ask traders many of the times, how do you identify the end of the trend? In a flat formation, you can identify the end of the trend in various ways. One of the patterns that are oftentimes there, in this kind of patterns, you can actually expect a 3-week move and maybe 5 weeks followed by this kind of moves here. I know oftentimes textbook tells you can be expecting the 335. Okay, it's possible to do so, to expect that, but the market changes. Okay, you need to adjust yourself to the changes or the market conditions or the changes in the market. All right, you can actually be expecting that this can also be a 3-week move. Okay, but for some sort of moves like this here, let's actually see what this one actually played out as and how we should plan for it. Okay, so price continue upside. Okay, so it's also a possibility that you could be planning, for some of you that actually believe in the failed drop strategy. Okay, you can actually plan this. This is actually looks like a failed drop. So one of the things you could actually do, you could actually put up a Fibonacci tool and then watch out for different areas, how price react around different Fibonacci areas. This example here is going to teach you a lot. Okay, Fibonacci areas are oftentimes very important. You want to swap through a higher time frame premise. If you're on the daily, the 4-hourly time frame, you want to swap through into the daily, maybe the weekly, to see how these areas are being being operated or price operates around this area. All right. I'm going to teach you that on the next video. I'm going to try as much as possible to do so. Okay, so let's see how price operated. One of the areas which I'm going to be waiting for a rejection, a very nice one, is going to be the 38.2. Let me see if I have a rejection of the 38.2. All right, so we don't have a rejection of the 38.2, but rather we have price pairing with this candle of this area and making a retracement. So definitely, I know that price is going to continue moving downside. Okay. Let's see how the new price actions develop. Okay, so we have price pairing through 61.8 and then making another push to the upside. All right, so at this point here, this is also another way of planning your trade. It's oftentimes bad for traders that they do not remember key environment. They forget key environment. They forget previous supply areas. You don't forget previous supply areas. You actually have them at the back of your mind, or you take note of them and you see how price reacts around those areas. All right. So in this example here, this was area which we were looking out for a bounce of 38.2, but price pierced through it, retraced of that zone, and dropped one more time. You can as well be waiting for a break of this point. Price breaks this zone, retraces of this zone, then we continue upside. Okay, so it's one of the things that you want to be putting down on your trading journal. Okay, you want to putting that down in your trading journal so you can understand or plan when price hits an area which price previously hit before. Okay, now we have a new price formation. We have a consolidation here which could have been a flat pattern, and we have a drop there. So I would put up these as an ABC. Okay, I will put up that as an ABC. And what I'm going to be doing, I'm going to allow these. Okay, I'm going to wait for. Now, these should have been my end of C wave. And then price should have continued upside from this point here. And then price did fell actually at that point there. So I'm going to go over, take out first this C. I'm going to leave this one here. I'm going to look at another possibility here. I'm going to look at that if this could be my ABC now of the bigger degree trend C. I'm just going to change its look just a little bit because I want you guys to understand this one here. Okay, so this, I'm going to put up this now as my new degree C. Okay, I'm going to allow that. I'm going to see price actions. Okay, wow. So we are still I'm still actually waiting for a break. Okay, so we don't have any break so far of a key environment. I'm going to put up my supply area there. We have a new supply. Okay, all right, so at this point here we have price back into that supply. Okay, I didn't know we were going to be back into the supply. Just put up a good supply area, how I basically do my trading, and we have it that price came into that area. So what happened here, we had a rejection of this area here nicely. Let me see the next candle here. Wow, voila, you can see this supply area here is not able to be taken out by this current move here. So I'm going to be expecting another drop. If price gives me a valid entry here, I'm going to be having to wait for a discount. Okay, for those of you guys that understand what I mean by discount here, also watch out for my next video on examples of discount in the market and why market do that and what are discounts and why you should not ignore them. All right, so we look at the next move. Okay, so we have price taking a discount. Okay, this is actually a discount. It's easy for me to see this as a discount with my eyes. Okay, what I'm going to be doing now. Okay, this is a very different price movement here. Here I'm going to take out this initial ABC here. I'm going to label this as 1, 2, 3 here, 4 here, because this moved. If you go ahead draw lower degree trend here, you can count the 1, 2 here, 3 here, 4 here, 5 here for a lower degree trend in a motive wave format. Then I'm going to put up these as my corrective wave 4, I'm gonna put this as my corrective wave 5. If actually this is the end of the wave, I'm going to take out this Fibonacci tool here because we are done with it. Okay, but one of the things I want to do first is I want to go over another time frame. Let me go back to the daily and then bring that Fibonacci tool back in the weekly. All right, so let's see on the weekly what happened here with the Fibonacci tool around the 78.6, and actually price did spear through that point at one point, went back up at one point and then dropped back down at the next point, and it doesn't really make sense as a good rejection area. But here we can actually draw another wave scenario here. So let's look at how we can plan for another wave scenario here. And looking at the pattern, or this one here, we can actually do this. Okay, so we know that this could have been wrong and this would be the larger degree trend. Okay, I'm going to take out some tools now and you can see nicely how this looks. Okay, it looks very unique. Drop, impulse, drop, and then we can look for the next impulse. Very nice formation. Okay, so let's see how that would have played out and how we would look to approach this one from a trading perspective. Okay, so how do you manage this? And if this is actually end of wave, you want to manage this way. Okay, you put up a pending buy stop. And remember guys, my TP1 for a formation such as this is going to be the extreme of the B wave. Okay, the extreme of the B wave is where you want to look for TP1. Your stop loss is going to be below the previous low, 10 pips plus. And we have a 1:1:8 risk to reward, and your next target should be the 127. Okay, so the next target is going to be the 127. Okay, so we have the next target going into the 127 like that. Okay, so let's just go ahead and put up our target there. 1:2.77 risk to reward. I'm going to take out all these Fibonacci tools first. Okay, I'm going to have to bring it back. Okay, so in case you missed anything, you look at it one more time, how we did plan that trade. All right, so let's play it out and then let's see. All right. When price actions change, you change with price. Okay, you change with price. All right, this is a new price action. This is a new change. Why is this market, or why is this movement here in a 5-wave move? Let's look at the moves. Can you count the moves? I think, yeah, we can. We can, surely we can. All right, so this is 5. And if we use our Fibonacci tool nicely, as always, we can see that 38.2 was just slightly off. Okay, and we have the 61.8. Okay, so let's assume that you were not putting up your pending buy stop here, and let's say a new set of traders that actually did not plan this setup like this comes into wanting to take a new trading action. Here I'm going to wait at, you see that nicely that the 38.2 is taken out, so I'm going to wait at my next target, 61.8. This is the breakout. My stop loss is going to be below previous low, and my target is going to be in excess. Now in this explanation, or in this example here, I'm going to be targeting a more wild target. Okay, I'm going to be targeting a more wild target up to the 161.8 because we are trading different patterns. Okay, so for the structure, this structure here, this triangle here, we did operate differently. So we're trading a triangle, and this was our take profit 1, take profit 2. But for this kind of formation here, which we are looking at now, we're going to be taking our 127 as take profit 1 and 161.8 as take profit 2. Okay, so I know this actually may not be making sense now, but they are different patterns. You see them at different times. So when you're seeing price at different times, or different formation has a different approach to it. All right, let's look at how price played out and if we could have been triggered on the trend. Let's see. All right, so we have price just come just closely into that zone, and you don't want to just go rushing into positions or rushing into trades. Okay, so if it doesn't trigger, I leave it. Okay, there are no two ways about it. All right. Okay, and now we are triggered on the trade. Wow, what a drop. Now we have completed the wave 1, the wave 2. Now we're working on wave 3 to 4 to 5 upside. Okay, so I don't know at what length that will complete, but I'm going to be believing that at 161.8 I should be off the trend. Okay, I'm not going to be overly concerned what happens afterwards. Okay, until price hits a new high, and you can see next that 161.8 was triggered, 127.1 was also triggered, and all this profit will also back. So I'm going to go off this trade now. What I'm going to be waiting for next is I'm going to be waiting for this wave 4. All right. One of the things to understand about wave 4, I don't know if you guys have learned about this. Okay, if you guys have learned about this, that by the rules of Elliott wave, by the rules of the Elliott wave, that wave 4 should not retrace into the price territories of wave 1. Okay, if that be the case, you should not be looking for an impulse, but rather you should be working out a corrective or end of wave. Okay, you can be working out an end of wave, say end of 5 wave, like that. Okay, it's actually a motive wave. Okay, ending diagonals are actually leading diagonals, actually end of motive wave, because that can be defined as motive wave. Okay, so we have this. So let's look at, in this example here, how we should plan out for the next one. So looking at this one, I would allow price to play out nicely. All right, here, these are 2 different examples. So here I will be taking a Fibonacci from swing low to swing high, and 61.8, nicely done. Okay, we've seen that price have also gone below 61.8 nicely, and though we've not tagged 78.6. okay, so let me just I'm going to allow some days to pass. Okay, so with that, I think I see a reason to take a trade. Okay, so off this point here, I see a bullish candle here. So this bullish candle followed up by this one here, I'm going to put up a pending buy stop at the break of this one here, leaving also, I want to see a higher close of this previous structure. Okay, so with a higher close, all right, I can take a trade off this one here. So we have price bouncing off this point here, and that's one. All right, so we have a higher close, just slightly off that zone here. So this is where I'm going to put up my next long position. My stop loss is going to be here, and I'm going to be targeting the next leg. So I'm going to be looking at the next leg, which is going to be the 127 extension. Okay, so we'll leave it at that. So let's look at it. Okay, so that was triggered nicely and start to see some upside. So I want to tighten my stop loss here. I want to do this to my stop loss. Okay, so I'm going to allow this to run. Okay, so let's see how long. All right. Okay, so that is triggered nicely, and you can see that the profit is target area has been hit. Now, one of the things we should do is remark our chart. Okay, so we want to take out previous structures that we had previously, and we want to relabel our chart. First, this is how you do it. Okay, initially we planned for a wave 2 here. Okay, what our initial plan was a 1, 2, 3, 4, 5. But this fell in here, so we have a wave 1 to 2. This is what we do not know what it is yet, so I'm going to leave it for that. So rather, I'm going to plan this trade as this. I'm going to put this as a leading structure. Now, This is my possible leading structure. And what else am I going to do after this one? I'm going to wait for a retracement up to the 61.8. Okay, that's what I'm going to be doing. I'm going to wait up to the 61.8 to take another trade. Okay, guys, that's what I'm going to be doing, because that is where price, or I will be expecting another push. So this is a leading structure, which is a motive wave, and this can also be my bigger degree wave 1. This could be my degree wave 2, and we can look for the next wave 3, maybe to upside, or be it whatever it might be. 5-wave move can actually be a motive wave, or can be the start of the wave, maybe a wave A. Then you can be looking for a wave B, some sort, maybe back into that zone or some sort of. So you can actually be having a very shallow retracement up to 38.2, or a deeper one up to 61.8, or maybe much deeper up to 78.6. Okay, so this one here, we're going to wait. Now we have a trade plan, so we are going to be doing a waiting game. 38.2 is being bounced off, or something close to that, then price breaks off the zone. So we're going to be expecting price to continue downside over the next few days. Okay, so it's no problem. We want to be seeing price do that. All right, so at this point here, we have a very good candle here. This was a very strong indecision candle, and we have a higher close. Then we could put up our trading gamut, and then put up a buy here, put up a stop loss just below here, and then we're going to be targeting the previous high in there. Okay, so you can expect that price could either move in a speedy movement, maybe breaking off the previous E leg, or could also consolidate. So either way, the extreme should be your very first target, and then you can reevaluate the situation based on a lower degree time frame, and then see when you can actually hop in on the next trade. So leaving this one behind, or leaving this one and to run, let's see how this one would turn out to be. I would like to shift my protective stops to break even, and also lock into some profits, and then let's see, voila, that moved into the target there. Okay, so what we're looking for next, we're going to be looking for either price could retrace and then continue its upside movement, or price could also move back into maybe a direction such as this one, into looking for a new wave. And then we could also be planning out for what we should be doing after that. Okay, so please share with me in the comment section what you think about this, and also if there are other educational materials which I should be giving to you based on the Elliott wave. And tell me as well, what are your major difficulties when it comes to trading the Elliott wave, and what you would want me to share with you in my next video. Share with me those questions which you have from these other videos which I'm actually sharing with you right now. And also, please like this video and share this with friends if you want to assist them in their journey and into becoming a successful, consistent trader. Elliott wave concept is actually working, and it's the way to go, because it gives you the overall display in terms of price movements or feeling of the market participant in the wave count. It's actually a good way to adopt, and also a good trading methodology in order for you to continue in your journey into becoming a successful, consistent trader. See you on my next video.